All right, ladies and gentlemen, welcome to the show. Aram's not going to be here today. I'm not sure if Mike will be here, probably, but we'll see. So I decided to go live just to give myself somebody to talk to. Um, let's go. Oh, we're going to go over crypto. We're going to go over stocks. What up, English? Crypto. We're going to go over some stock stuff. I have a sinking feeling, and I have nothing to prove this or disprove this, is that Friday's rally could have been a relief rally after kind of a down week. I'm talking about the stock market. And so it may not correlate into gains next week. We shall see. We shall see. It's still super early in any kind of recovery effort, as many things have fallen apart, especially in crypto. So if you guys, this is my power hour. I do this every Saturday for subscribers, and I do a daily video. I also do a daily newsletter every day but Sundays. Pretty much not doing Sundays anymore, unless the market really demands it. So if you like the content, you can go to real-crypto.com and subscribe to the show. $65 a month, and you get all that good stuff. Also, access to me. You get access to me through our private Slack chat room, and we'll chat, we'll rap. We're trying to get people leveled up in trading, and that's kind of what this is about. So on to the markets and what we've been looking at, discussing. So we have this. I've changed a couple of things. I've added a little bit of coloration to some of the analysis that I've been doing a couple weeks ago. We went over Wyckoff's model again for the millionth time, which is always good to do. And I kind of added these colors, not to all my charts. I think it's in this one. Yeah, here we go. So I added some colors to some of my consolidation boxes that I'll draw from time to time. And I think I'm going to be a little bit more deliberate with this. So if you notice, we have an orange consolidation box, and then we have a red and then a green. Greens, obviously, when we're in uptrends. Reds are tops, and oranges are generally consolidations where, we don't think we're dropping. Red means we generally think we're dropping, and then green is when we're going up. So yeah, you can go from red to green. That's fine. You can go from orange to green. You can also go from green to green, I guess. But like here's a little cycle, for instance. We got green to red to orange to green into red again, which is kind of where we were. And so that's where we are. And we did talk about potentially getting into this orange box, and we kind of got there for a few days. We can get rid of that one right now. We're up there for a little bit, not too long, and we've subsequently rolled over, and now we're in a bear flag in BTC. And I mentioned yesterday, during the stock market, things kind of were tending to rally. I wasn't plugged in on Friday. Not a good day for me. And so I really wasn't paying much attention. But when I did look back, I really wasn't. I mean, I saw some good stuff in the stock market. There were some undercutting rallies on the indexes. And we're going to look at some of that because I think some of that could maybe be actionable, although it'll be a little late at this point. Not a lot late, but a little late. Just depends on what's going to happen to the markets, which we can never know. But the point is that when the market's ebbing and flowing, you kind of have to go with it and stay aside when it's undecided. Right now, it definitely feels undecided to down. We also have quite a few things that are popping in crypto, many percents that I have. We'll go over those later, and we'll take a look at those and see if we can find any kind of rhyme or reason why they popped, at least on the chart. Last week we looked at Zcash and Dash and didn't really find too much reasons for why they were going up. I mean, it's always fine to know reasons. It feels a little more secure when you do, but you don't always get that. All right, so BTC rally yesterday. Not really a low volume rally, but definitely not a high volume rally. And pulling in right now, bear flagging on the daily out of this Wyckoff top. And where we go down to, it's unknown. If I were to draw a box here, I would probably just draw an orange box. And it's a pretty new box. So therefore, I don't really feel a huge need to, there we go. I don't really feel a huge need to make this the final box shape. It will change, it will move, it will get shorter, it will get longer, but we have broken down and we're in a bit of a downtrend right now. Whether this is a longer consolidation, time will tell. And that's when we start drawing these boxes, is once you have some type of a structure. So we could be here, and maybe draw the box, maybe draw this orange box up to this level, whatever the case may be. But once you come down and test again, then you have a more definitive anchoring point for any kind of analysis you want to do, and you end up with a Wyckoff bottom. So we're just kind of waiting and seeing what the market's gonna provide, and really not much more than that. I mean, I think trading right now is very difficult. I think if you're fortunate enough to get into some of those alts that have been popping pretty crazy, and you're there in the right moment, getting lucky, that's great. And you know, I think luck is experience plus opportunity. So the experience to know what to do, and the opportunity of being there. So you know, lucky doesn't necessarily mean you don't know what you're doing. It just means you're in the right place at the right time. And yeah, so that's kind of what I'm saying there. But on BTC, not much going on. I don't think yesterday, kind of a high volume day on the daily, not one of the top ones, but getting up there. So we'll see if that provides any kind of actual support going forward. But right now, it's just a bear flag. All right, next up is Ethereum, which has broken quite a bit of structure. As a matter of fact, we talked about this in the show about breaking this Pi Method trend line that I have drawn here. Now, Pi Method is kind of my framework for categorizing, I guess, categorizing runs. I'm not sure if categorizing is the right term, but Pi Method is essentially a framework around how runs mature, is probably a good way of putting it. And the run in Ethereum has gone past maturity. It's rotting, essentially. We broke down here on high volume, but we never really broke the Pi Method trend line. But then we went through it sideways, and you know, we got rejected for the final time. And now we're firmly underneath of it at the 200 daily moving average, showing a whole different market cycle at this point. This also looks like a bear flag. You do have some high volume here. Is that the bottom? Well, that kind of looked like a bottom. If you think that's a bottom, then that looked like the bottom. And that's not a bottom. This one also could not be a bottom. And if you're looking at this cycle, if you're looking at Ethereum, you're just like, okay, well, it's going lower. I think what a lot of people fail to do is look left on the chart at the roadmap that's been laid down for you and say, okay, well, what could the future hold? Well, it can hold a move down here to this prior horizontal, give or take, you know, the 2750 level, 2700, whatever, somewhere in here. Could go to this breakout point right there at 26, whatever. There's support down here at 22. So there's a lot of places it can go to the downside. But if you were to say right now, let's say we bounce, where is that going to go? Well, you could draw some trend lines there. And that's, you know, if it were to bounce up into here, it would just roll right over again. So there's nothing really here pointing to any type of a bottom, anything that's really substantial that you're going to want to stand in front of and hold the line. And nothing right now. You know, it gets there eventually. You can go back to the bottom over here. You can go back to this time frame and say, okay, where am I going to hold the line here? Well, for you, holding the line means suicide, because you don't get to choose what line gets held. You're just putting money at risk. So holding the line is foolish. I'm not even sure why I said that. But you get my point. A lot of people say, oh, ETH's not going past here, and they're going to buy a bunch, and they're going to get hurt. Because it can go past there, because there's no line to hold. It's not your line to hold. So if you look at the last larger downtrend we had, there's many ways you can justify re-entering Ethereum. A number of ways. You can use trend lines. I like to use trend lines. You can use moving averages, which are a simple way to do it. I feel these secondary tools leave a lot to be desired. I mean, it's easier to say, oh, it's a lower high, than to say, oh, the RSI has a hidden divergence. You know what I mean? It's just kind of a pain in the ass. And also, there's a lot more nuance in the breadth of this than there was the breadth of this. Like, even if you were to go full screen with this, oh, that's the wrong one. Even if you were to go full screen with RSI, like, is there enough nuance in here for you to really get a good feel of something? My answer to that is no, because this is like a line. This is a line chart. This is a line chart. It's not an OHLC chart. You don't get all the context of the highs and the lows. Take this big green day, for instance. It just has one data point in the RSI. So you have much less context in the RSI than you do here. So I feel if you're looking to get back into something like Ethereum, if you think that we're down here in Ethereum, you know what? If you listen to me, you're never going to catch this bottom print, except for extreme circumstances. And you're going to be waiting for a moment like this or a moment like this. Whereas if you think this is the bottom, you know, okay, here you go. Let's say you think this is the bottom. And for all intents and purposes, it could be a bottom. But it's really close to the top. Like it's not that far away, and eventually, it does erode away. So if you hold on to those beliefs too tight, you end up getting hurt dramatically. So right now, for me, it's kind of waiting and seeing and watching. We've broken a lot of structure. There's lots of points we could bounce, but we're really not even near them yet, right? We're not even close to those moments I mentioned earlier. We're not close to here. We're not close to here. We're not close to here. We've already broken the supportive trend line. There's nothing left, so we're just floating in the wide open ocean right now. And I just don't think that's a place to be. I don't think it's smart to put money to work in these circumstances. All right, we're gonna go a little bit faster here. As you know, most of the price action I discussed is on display for a lot of these other tokens. And then when we get to the alts, we can slow down a little bit. All right, so XRP, nice little rally yesterday there with some pretty good volume, but still a bear flag on the daily. So is this enough to get you in? I mean, it could be for some people, but there's lots of structure above you. Each of these is a resistance point to be blown through, and we haven't done that to any of them, so I don't think that's really actionable. BNB's in a bear flag after breaking down from a bear flag. Also breaking some Pi method trend lines, 50 period moving average, which is in purple, and getting a very loose support. And that's not even really support of the 200-day, but that's the wick. Okay, that's the wick from Liberation Day 2.0, and this just looks like a low volume rally / bear flag to me. I don't really see. I could be very aggressive and go wick to wick, or I could be less aggressive and I could go like this. Different ways to do this, but the fact of the matter is it's a rising trend line, which means not good things. Solana, also in a bear flag on its Pi method trend line. This market has continuously shown weakness in names that were once not weak. Kind of a weird situation we're in. It was a bunch of random altcoins pumping for some weird reason. So Solana up here chopping the good chop, bear flagging out. Nothing really to do here, I don't think. If you're looking to short the markets, you can use these tops in the bear flags as shorting stop losses. Ideally, you do it really, really quickly after the top is formed, which can be tricky to do and does take some time and learning and experience. But if you can do that, if you can study these other charts on flags that we've broken down from, like here's one that would hurt you because it keeps going higher and higher and higher and then higher before finally breaking. But once you start on the daily seeing big cracks in the armor, you can start to this is a pretty good place to short. You have an H pattern forming here, and then you go back up, you fail this one, ends up in a big down candle. Look at that. It's all the way down, closes at the low. That easily you could short this at the beginning or whatever of the next candle. And part of the wisdom of trading, and this is why it takes so damn long to get good at, I think. Yeah, because this is a good example. I mean, look at all this chop up here. If you're trying to short Solana, if you see this big bear flag here and you see the weakness and you're looking to short it, there's so many opportunities to short from here on through here for 2, 3, 4 weeks. And if you're hell-bent on shorting Solana, you're going to get really damaged because most people won't be patient enough to wait for an amazing signal. And there's not too many. I could argue, and I guess I'm going to, you could argue somewhere up here could have been 1 or 2 trades you could try to take. This one right here specifically, after you have 1, 2, third failed high, you've already come down, you came back, you stalled, you moved down again. You could try to short somewhere in here with a stop loss here, here, or here. And then once it drops, another good opportunity, like I mentioned, is something like this, where you're kind of getting some momentum going down. You had a clear rejection of a prior high. But all of this is super dangerous. I mean, because you're never going to make a profit, and then at the same time, it keeps making new highs. So even if you're holding this trade, by the time you get exhausted in the trade, you're down so much that you're really not going to want to re-enter on the right side of this structure. So it's just one of those things where I think people need to be cognizant of where we are in the market cycle and willing to be patient and let it play out. You know what I mean? Let it do what it's going to do, but you only have a few critical moments to make good decisions, and I think that is why trading is so hard to do, because when you're so tuned in, you see everything as a potential signal because it is. It is a potential signal. just like every girl's a potential person you can have sex with. You just don't walk around fucking every single one of them. That's just the way that it works, right? You have to wait for your opportunity, wait for the one. Otherwise, you go to jail. That's just how it works, you know. And you don't want to go to jail before you find the right one. And so that's how this works too. So anyway, cool little teaching moments. I like them. Let's keep moving on. Dogecoin. Dogecoin moved up yesterday. View this as a bull flag, but it stalled right at a breakdown point. So while some people see positive, if you look a little bit left, you can maybe see what is a potential reality, whereas this moved up into resistance. It's just a move into resistance. It's not a pop and a bull flag. It's a move into resistance. And you have to go through the resistance for it not to be resistance. And this so far has not done that. Tron lower, also move into resistance yesterday. That's what I was saying at the top of the show. Just kind of feels like these moves are either forced covers or just trying to get flat into the weekend or something by some market makers. It's hard to say exactly. Cardano moving up into resistance here. This looks like just another retest for rollover Hyperliquid. Still hasn't broken down from its Wyckoff channel. Working on a bear flag though. So this could be one that maybe we're shorting if you think we're going into a larger downtrend, because this one's been able to hold up and really hasn't broken down yet. Now there are some coins in some cycles that don't break down. So maybe this is one of them. Hyper is kind of newer, you know, popping up here at the end of last year, and then you know, has been able to hold up relatively well. So maybe it doesn't fall as much as others, but sometimes these can crash really hard. And I don't really have an opinion much on whether Hyper is going to crash or not. I like the fact that it's able to hold up here, but this is a Wyckoff distribution, and generally it should move lower. Sui. Not much going on here, just to move up into some resistance. Yeah, not a lot going on with a lot of these actually. Link move up into resistance. AVAX move into breakdown point resistance. So if you notice, like Link, these are two good examples. Here's an obvious swing low that was respected here and that was respected here and rolled over. Then you have AVAX with this swing low that was not respected here. So does this mean you buy it? Nah, maybe. I mean, but once it does this, you're selling at break even. So, you know, you kind of have to, and then there's different resistance points. There's like the bottom, there's all those swing lows. Then there's what I call the breakdown point, which is where it clearly starts to break. Like the selling pressure is so obvious that it can't hide itself any longer. Bam, bam. Each one of these points to me is significant, these breakdown points. All right, next up is Leo, which is doing choppy Leo stuff. And wide and loose is not good, and this is the definition of wide and loose. So I usually avoid things like this. I mean, I guess if you want to short, but this moves so fast, unless you're watching it, I'm not sure how you're going to be able to capitalize unless you get lucky and are really right directionally, and it moves fast. XLM, choppy garbage sideways stuff, moving into resistance. Bitcoin Cash, moving into resistance up here. There's a bunch of swings right there, and we rolled right back over again. So this is what I was saying. Friday kind of seems like a weird day where it's forced buying, forced something. It's just what it seems like to me. But I'm just generally not enjoying the action of pretty much all this stuff. TON moved up, but is this something you really want to jump in on? No, probably not. Hasn't broken down yet. Got past the swing high here, kind of was living up here for a bit, didn't get to the breakdown point, and now we're kind of, you know, that resistance here is still resistance. Looks like maybe this angle does it. There you go. That's pretty darn close. And go down like that. You can maybe choose a wick. I don't know, whatever. But you get the point, is that there's always some kind of resistance for these things to move back into before they start selling again. Shiba Swap got past a lot of stuff, but got over. Now there's a breakdown point high to contend with, and it even peaked above that and is rolling over. But a Shiba one you want to bet the farm on here. Doesn't look like it on the daily. Not to me. H-bar, choppy sideways garbage. Litecoin, popping garbage. This one popped into resistance, but hasn't gone anywhere yet. So I think if you like Litecoin, I do think you're patient with it here. The volume signatures look really good. This is a low volume consolidation / bull flag, right? Until it just erodes away into nothing. But, you know, just because you think you see a bull flag, you don't buy it. I mean, you literally could make an argument that your bull flag ended here. Like this was your bull flag and now it's negated. there's multiple arguments to be had, and I personally just don't. This market needs to prove itself right now. It doesn't need our capital. It needs to prove itself. DOT. My newsletter yesterday, I mentioned shorting DOT with a tight stop loss, and that didn't work out very well because it rallied for some weird reason. Maybe it was shorted too much. I don't know, but it popped pretty good right there. Ending in a topping candle. VA tool looks pretty good, but again, I just don't think. Like if DOT is the best looking thing on here, we're in trouble. We are in trouble. MNT, bear flag. All right, is pretty simple stuff sometimes. All right, I'm going to move on to my altcoins. I got to pull up my newsletter here, so ignore my thing on your screen for a moment. All right. Still with me, English? All right. Let's move on to altcoins, USD pairs. There were quite a few more alts than I thought I would put on here. Man, some of these pops have been pretty darn dramatic, and I don't know why. It's hard to tell exactly. But AR, one that recently popped, not advocating to buy this, but I like to look at coins that have interesting looks to them and are doing something other than the normal thing, which right now is just sitting in a bear flag or breaking down from a bear flag. And AR is one of these coins. And another thing I wanted to do today was to see if there's any similarities we can look for other tokens before they pop. So here we have a consolidation for a period of time. Almost another Wyckoff, as a matter of fact. So yeah, this is kind of a Wyckoff bottom, actually. And then you end up with a kind of a choppy cup and handle here. Pretty good signatures now that you kind of see it after the fact, but I didn't catch it beforehand. You got low volume there, price eroding there. So that cup and handle signature right there with declining volume in the handle, although it is also declining ever since kind of the bottom of the cup, but regardless, you get to pretty low volumes in the handle as we hold nice and tight. Then we start to expand and volume comes in, and you get a large rally. So this one, if you're, I obviously didn't pay that close attention to AR. I mean, that's 89%. There are, if you want to spend some time hunting some of these alts. So AR gave us a chart pattern. It did. It gave us something. There's a rally, there's a cup, there's a handle. There's some hidden accumulation happening here. And the VA tool does show it a little bit. The green starts here in kind of just before the handle starts. The handle technically starts here. So just before the handle starts, we flip green on the VA tool. The greens are actually more elevated than the reds over here. So I would view those as positive signatures. And then we end up with a large rally. So what do you do now with it? Well, not much because it's already happened. This is the past. You can look for a retest down here. You can look for flattening of price action and try to find a tight stop loss and maybe get a move back up here. And if you're really lucky, another breakout if the market's going to allow that. But I mean, overall, this isn't a bad signature. Now, the buyers are eroding away here a little bit. You see the green on the volume aggregation tool is pulling in, and the red has kind of come up to match it. So there's not a lot of accumulation happening here. And on the daily, there's a big resistance right here at $9. So it's going to be a little bit tricky, even with all that volume. I mean, I don't know if they just are manipulating this. Like, this is where they bought, they run it, and then they just distribute up here. Just a real simple squeeze play for some manipulative traders. Possible. It's possible. All right, next up we have Dash, which has been on its own run, but down 23% today. So, yeah, trading's this dichotomy between trying to catch stuff and get lucky and then trying to sell with skill. Because I do believe selling is more skillful and entering is more luck-based, because if something is working well, you have to have the wisdom to capitalize on it, right? Like if you're in a trade, you have to know how to exit, when's wise to exit, when to hold. And that's a whole gray area. But in the show, we've been talking about, exiting at these opportune moments, and exiting early usually being better than exiting later. At least, in certain environments. Like if we're in a super, super bullish environment, yeah, you probably want to try to hold on. But if you're in anything other than a super, super bullish environment, then you need to be looking to capitalize on the opportunity and exit at maximum profit. And that doesn't mean holding through, let's just say you sell at this trend line, you're holding through a 40% drop. You're not maximizing profits holding at a 40% drop. Now, let's say you got really lucky and bought right there and sold right on my trend line break. It's 161% for Dash. Are you mad at that? No. But now you only have a 58%. Are you going to be a little bit mad at that? Yeah. Yeah, you are, because you had a lot of opportunities to sell and you didn't capitalize on it. So, like, what do you do now then? Well, now it's tricky. Now it's difficult. It's difficult when you have a position to it's difficult when you have cash to buy, and it's difficult when you have a position that's in the middle of a huge range such as Dash is right now. It's in the middle of this 150 up to 47. You know, it's like almost dead in the middle. So what do you do, Randy? You're the expert. Well, I don't know. If you're holding on to this, I mean, do you hope it bounces back up? It probably will at some point hit this trend line, but eventually over time this erodes away, you know, into being horizontal come the 15th. You can go sideways into the 15th and drop and still respect the trend line. So it just depends. If you come back and hit it, you know, you sell it to 109, I don't know, but it's just very tough right here because there's really nothing saying anything to you at the moment. In reality, you're just, well, you've already got your sell signal. So let's go over the exit signals. You end up with a large stalling candle here, which is on pretty high volume. I think it's the second highest of the run because this hasn't happened yet by this candle. This is the second highest of the run. You're extended from a consolidation. That in of itself is a form of a sell signal. And if you want to hold that, that's okay. It's the first one. Now, by the time you get this one over here, you have a double top, you've elevated volume twice at the same level, and now you're starting to play with this very kind of extreme trend line here that, you know, it's really that's the trend line. But then you go sideways, and then what happens is you start to undercut like these low candles right here. You start to undercut lows and pull in. After some larger distribution, kind of the largest distribution, we start to see the volume aggregation tool starts to turn up here. And by this point, your buyers and your sellers have met. You have a lot of red candles. And I really do think, you know, by the time this candle is printed, this looks like a whole different thing than this looks like. Like, does that make, if you think this is going to continue, look at the breadth. Look at the breadth of this situation, you know, versus the breadth of this situation. I mean, even the extremes of this consolidation are smaller. And this went up, down, up, down, up. This hit 3 times on the top side, 2 or 3 times on the bottom side. It's a much different, it's called wide and loose. You get wide and loose up here, and then, you know, down here, or when you consolidate, you tend to stay pretty tight, you know, or tighter. Even this whole base, I mean, didn't quite make it at the breadth that this got with the elevated volume. So in my opinion, you should be looking at exit trades there. On the way up here, you could look as a retest exit. I mean, it's difficult when you get large volume candles. You think this is additional accumulation, and it is tricky, and I'm not saying it's easy, but by the time you have this behind you and you move back up, sellers are already looking to sell again, right? Like they've already shown their hand. They're like, yeah, you know, we're going to sell up here. And you'll see later there are contexts where that changes, right? It's not very common actually, but it does change in Zcash. I think it's Zcash. We'll see that when we look at Zcash later. But in this context, you got 3 large candles with large volumes, and then the accumulation seems to have worn away. So by now you've already had like 12 exit signals, and it's just difficult to really do anything here with Dash. All right, next up is ICP. Up another 13%. Oh, it's ICP. This is the one I was just talking about. This is the one where you get a pretty clear exit signal. That, in my book, for my Pi method and stuff, that's a pretty clear exit signal. We've already rallied a substantial amount off of the lows. You're pretty extended from this small cup. You get a super high volume candle. But then something unique happens. It doesn't happen all the time. This is a more unique and rare situation. You do end up with a cup and handle here on this 2-hour time frame, and then it just goes up. Like, ignores that. So essentially what happened here is a large player came in, sold a bunch, and walked away. You wonder why this happens? That's exactly why it happens. This isn't institutional selling like we just saw with Dash. Dash was more selling by either a larger institution or more institutions or whales or whatever you want to call them, the people that have the big money, right? They're the ones that make these big moves happen. And with ICP, maybe just because it's a smaller token, you had one dude sell and then kind of walked away. And then the buyers came right back in and started buying. And we've been stuck in this uptrend. And this trend line here doing an excellent job of this. And there's more accumulation here than selling for sure. Look at the daily time frame. This is a ton of buying pressure for ICP. This is the Internet Computer. We followed this since the ICO when it was up at 600. I think is the top that I usually use for ICP, and it's down at $9. I mean, there's plenty of room for this to go up. It last topped out up here at 20. Last topped out here at 15, and we just came from 3 to 10. So this can continue. It's not showing tremendous distribution. You're holding trend lines. It'd be really nice to have a large base or consolidation because it's already up so much. I don't think there's a lot to do here, and if you do something here, you have to manage your risk by keeping your stop relatively tight. You don't want to give it a wide berth because ICP has a history of ripping your face off. Really, it has a history of not doing very well. But right now, it's change in history, so we'll see what it does. It's under accumulation for whatever reason. I don't know. But, maybe let's go to CoinMarketCap and see. And what number is it? 27. Wow. It's gone up 10. It's gone up a bunch. What's boost 10? I don't even know what that is. Yeah, here's the all-time chart. Gemini Powers XRP. I'm trying to see if we can, maybe there's some stuff on ICP. 4 use cases of the ICP token. Confirmed a clean break at above $9. I'm looking for some kind of fundamental reason. Privacy tokens have a moment. Zcash is stealing the show. It soared nearly 1,200% under 3 months, leading the rally. ICP are also making headlines driven by AI hype and real volume. These tokens are showing serious momentum, bucking the usual market noise. Privacy and AI are the new hotness. Will it keep going? So, yeah, maybe those are privacy and hotness. But we saw, yeah, maybe that's what it is. Maybe that's what it is. Yeah, for whatever reason. Yeah, nothing real fundamental, but it's continuing. So if you do want to buy this, if you can't stay out, you put a stop under the prior low, and then you kind of just let it go. And then if it takes a leg up, you can move your stop to a trend line, just to give it some extra room, because if you put a stop at the low, if you buy right now and you put a stop at the low, right, like this is your window of tolerance, as my therapist coins it. This is your window of tolerance where things are fine, but you start undercutting here and you're exiting. But let's say you end up, let's say you bought it down here. Let's say you wanted to buy in this consolidation, right? Let's say you bought on this candle, okay? You put your stop here, and then as it goes up, you put your stop at the diagonal trend line. So right now, your window of tolerance is here. And then as every candle goes by, your window of tolerance gets a little bit bigger, but now we're out of the trend line, so we want to move the stop up so like the corner hits the trend line. So you incrementally move your stop up as the thing starts to move, right? You just keep doing that. So now you're already, your stop is in profit territory and you're giving it room to run, right? So there's lots of things going on here, that strategies you can employ in situations, especially when it's responding well to a trend line like this. I think it's a very clean way to do things. It stays with the trend. You're not hyper analyzing every candle. And if you're able to do so, it just makes things a little bit easier to manage. So let's say you bought, right here. Now you're up 33% and your stop loss has you up 11%. Better than nothing, right? Like say just ka-chunk and just dives on you in 1 second. Better than nothing. So anyway, that's a way to handle this potentially, is, a method like that. Next up is Near Protocol. So near protocol yesterday with a monster candle, kind of out of nowhere. So let's take a look at near. See if there's anything here that was really that good. So there was a declining trend line in a general decline, and you took an extreme down here. You had a high volume bottoming candle, which is not bad, and then you come up, almost looks like an inverted head and shoulders, which I guess I missed. I guess. Where's your neckline? Here? I guess that's your neckline. Like, it's not a very well shaped head and shoulders. Also, the volume signature is wrong on it, so I'm just trying to pull something good out of this because it did have a rally. So I'm like, okay, well, what can we learn here? Well, I think what we can learn is higher highs are good. You do have high volume here. That is a good signature. You have high volume here. You move up fairly substantially, as a matter of fact. You don't really come back down and retest. You move up 14%. You pull back a really small version of that. And then you go with a small cup situation here. You make a new high. That could be buyable with stops at the lows, and you'd have been good. But was near on your radar to actually pay that close of attention? That's the question. Then you start to break the trend line. By the trend line break, things are looking pretty good. And if you're lucky enough to buy there, then you're rewarded. Yeah. Not everyone's going to buy there. I mean, obviously, it's not an amazing chart situation. So I don't know if it's anything that, I don't think anybody should be feeling bad about missing near. Consolidation here, something like this could be bought, but then you start to notice things like this. Like, you try to move up, got a big wick, second highest volume candle, maybe third, pretty close, and it just kind of rolls back over again. So already the sellers are showing their hands, and then here you've got all this resistance at this 340 level, whatever it is. You got all this resistance right here. So consolidating here, selling up here seems very, very normal and not like something that should be forgot about. I mean, just a lot of resistance up here. You got to respect that. All right, Zcash. Apparently privacy tokens, but Zcash down 21% today. 21%. So another example of selling aggressively can be good. Now, with something like Zcash, there's probably a couple of points. Let's look at all the points we could sell aggressively and ways we can navigate that, because that is a discussion. It's like, Randy, you say sell aggressively, but I'm going to miss on all this. On one leg, yeah, you are, because I mean, let's just look at this, the top of the past 24 plus hours. You get right back to break even. Like, what are you looking to sell right here? Well, how is that top different from that top, different from that top? Like, a lot of these tops are going to look similar. You know what I mean? They're going to look similar. You're not always going to be able to trade everything perfectly. But, okay, so let's go through this. So, Zcash, an early leader in this market cycle, for sure. And it's hard to catch the early leaders, especially when they're unexpected. Nobody's looking at Zcash going, oh, it's going to go up 1,000%. Nobody was saying that, okay? Nobody. So you start going up, you start breaking things, then you have a big consolidation here. Okay, there are ways to get into Zcash. By the time we're breaking trend lines here, this is a sloppy but still there cup and handle. It's not great, but also right below the trend line. Then your volume starts to increase. This is a good place to enter if you wanted to. But again, you have a big wick right there. But then again, you have higher volume stepping in over here, the same as the wick. So you can't let the size of the wick scare you. In this case, the volume actually really wasn't even that aggressive. But here, your buying pressure much more aggressive. So then let's say you're lucky and you get in over here. Well, where are we selling? Well, are we going to sell up here? I mean, that doesn't look sellable. You start to consolidate. That looks really normal. You start to get a little more selling pressure. You could start to think to sell up here if you want to. It looks like a short trend line is broken or breaking right there. That looks pretty close to accurate. You got another one right there. So that could be an actionable sell signal. Breaking this trend line with that kind of a volume, that could be an actionable sell signal at 144. Okay. It does go on. And see, this is the beautiful thing about selling early with excellent signatures. Like, you need a selling signature. You don't just do it randomly, okay? So if you sold here, what's the worst thing that happens to you? The worst thing that happens is you miss 5 days of choppy uptrend. that, you know, maybe gets a couple percent higher, right? I guess 20% higher. You end up with a horizontal here. You know, say you miss all this. Maybe you're even really clued into Zcash at this point. Maybe you rebuy right there, right? Maybe you buy right there. You take this profit, you exit, you watch it come up to the high. You're ready to buy, but it doesn't quite get the job done. It rolls over, doesn't quite go lower, so maybe you're prepped to buy at this point. Goes up, hits the trend line, and then goes through it. So maybe you rebuy right there. All right, so you have one trade here. This is good. You give it some time to see if it's going to fall apart. It doesn't, and then it goes up. All right, goes up, pulls back, not really in a bad way. Your volume signature is really low. Goes up again, fails. Maybe you're thinking of exiting over here. Got this trend line that you know, once this trend line's exiting, this trend is in jeopardy. So you exit there. It comes down. If you're still following the thing, and depending how aggressive you want to be, you, I guess, could try to buy down here. It's not my favorite signature. You don't have exceptional volume. You do have a failure to go lower, though, which to me is important. And then you start to rally up. But by the time we are here, it starts to look a lot better. You know, it starts to look better. You're chopping around. You go down. You go up. That is a good thing right there. Hey, what up, Ted? Good time to DCA? I don't think yet. Yeah, I don't think yet. I think there's a lot of uncertainty out there right now. Yeah, not yet though, bud. How you doing? Everything good with you? So, sorry, I took a drink there after I asked you that question. Yeah, so here, right, you're horizontal, you're looking at breaking highs. You do start to break highs, and then, you know, this Liberation Day 2.0 garbage happens, and you end up getting shaken out there. I mean, or you exit on this big candle too. So you could have two trades here. That one's, I guess, 30%. So then what do you know, then it goes up, and then you get maybe some more opportunities to sell. This doesn't look like, this looks pretty good. You get the retest here. There may be a notion to sell as you start breaking some structure here, but then you slap on here, you go back up, you maybe get back in, you know, get back in on over here, and then as you go up, you have another selling signature right there. Look, in reality, what you do is it's hard to get everything, right? It's hard to get everything, and then by the time you come back down here, you can basically ignore everything up here. So if you sold here, there's kind of a high volume sell. If you sell there and it rallies 60%, like, that feels bad. Don't get me wrong, but if you're really in tune and really lucky, you end up buying back in on a breakout. We've already gone through that sequence a number of times. And then you have these other exiting signatures, you know, like right there would be another exit for me probably, or right there. You know, you break a consolidation, break a trend. You're getting pretty vertical at this point. Zcash could be done. It's possible. Yeah, you get down to this trend line. If this trend line holds, you're like, okay, well, I guess the trend line's on again. So there's, you know, sometimes 3, 4, 5, 6 trades in a rally. And I always feel better exiting than I do holding. I just do. Been DCA for a little while. No more trading. Okay, yeah, that's fine. In Bitcoin, or what are you DCAing in? Cause, yeah. Alts. Oh, that's dangerous. Yeah, that's really dangerous. A lot of alts don't come back. They better be. I mean, look at Solana, Ted. Solana hasn't come back at all, but I think you need to choose your assets wisely if you're DCAing, to be honest with you. You know, Solana has been a shit show for a long time now. You know, back to March of 24, it's going to be coming up on 2 years here in about 4 months. You know, so I mean, I think if you're going to DCA and not trade, like, at all, like if you're not even going to exit at an opportune time, even on daily or weekly charts, if you want to do something like that, I would stick with very, very blue chip. And for crypto, it's only Bitcoin. That's my opinion on the matter. Um, I mean, you are in the U.S. You could just stick to stocks and trade, trade three times ETFs on a weekly scale, which is kind of similar to DCAing. I've 10x several accounts doing that, several accounts, granted in the same time frame, but you can do pretty good doing that. Alts are tricky. And oftentimes can be a very individual decision too. So I don't mind DCA, Ted. I would like you to have some kind of an exit plan at some point. Instead of saying I'm going to hold for 20, because a lot of people, when they say DCA, I think Bitcoin, I think Apple, Nvidia, I think these big monoliths that you really know are going up over the long term and you don't intend on selling because you don't want to time the market, which is fine. But I think you have to do it in the right asset. I'm just going to leave you with that. But I don't think right now I don't think now is good. I think in a downtrend like this, I don't think you DCA. I think you wait. I mean, I think you time the market a little bit. You know what I mean? I think you time the market a little bit, and you try to find a good bottoming signature. It doesn't have to be the best bottoming signature. You don't have to wait for the absolute bottom, but I think you do wait for a signal instead of just randomly doing stuff. And if you want to DCA, one thing that I've been an advocate of is you DCA, say you want to DCA weekly. You know what I mean? So you DCA weekly, say, okay, I'm going to allocate $100 a week or whatever it is and whatever the time frame, $100 a month. If you're allocating $100 a week, that's $400 a month. If it takes 3 months for this downtrend, let's go back to over here, right? Like if Bitcoin's firmly in a downtrend, like say here from February, and then this is April, like that's 2 months. You know what I mean? February to April, 2 months. You notice it's going down. You don't DCA on the way down. You DCA when it gets sideways or starts to go up. And that takes very little chart reading skills. You know what I mean? That doesn't take any massive market timing techniques. But what you do is you save up that capital during that time and you dump it all here. I think that is a much better way to do it than averaging down. Averaging down is a shit show. It's for idiots. And if you're even listening to me, I don't believe you're an idiot. So like this is an instance that wouldn't hurt you too hard, right? Like because this chops around a bunch. But you end up in these, like a market like this, right? That goes from 60,000 to 15,000. If you're DCAing all the way down, your average cost is going to be maybe here around 30. If you take the swing up, if you take any kind of a decent signature, you're going to avoid all of this. You're going to avoid the drop from 45 to 22, which takes about 3 months, and you're going to dump all that. Maybe you dump it right here. Maybe you think the bottom's in and you dump it in right here. That's a much better way to do it than here, 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 here. Ah, I got the mosquito. I just killed a mosquito flying through the air, you son of a bitch. Damn mosquito. Yeah, Ted, see, it gives you the safety of not having to time the markets to the degree that I kind of do. But it gives you an edge, right? And you just need an edge. You don't need the biggest edge of all time. You just need an edge. So, look at it. I like this example because it just works pretty good. Like once we double top, we've come down. Like we're here. Maybe you stop DCAing all the way through here, and let's say you get it wrong and you buy it 22,000. Okay, you mess it up from 52 to 16 and you buy it 22. Well, that's not bad. You know what I'm saying? Like going from 22 to 16 is way better than going from 50 to 16, or 50 to 22. And even if you want to wait longer than that, I mean, it just depends on how you want to do it. But if you wait longer than that, I mean, if you get really lucky with your market timing, then you end up kind of down here. So you end up down here or up here back at 22. You know what I mean? You could have bought this 22. You could have bought this 22, right? Whatever the case may be, it doesn't really matter. And you could even DCA some chunks. You're like, well, this looks good. Maybe I'll put a quarter in here. I mean, there's different ways to do it, but I think do it a little wise, a little more wise, I guess. Chart is not busted at all. Um, uh, well, let's look at it. Let's look at the weekly, I guess. Switch charts. There we go. Um, well, so I actually don't like it right now. I mean, I one thing with Bitcoin, and you mentioned alts, so it's going to be different with alts, right? Like this is Bitcoin. If I were to look at Doge, it's a whole different story. Like the top is way. Like I don't know what alts you're referring to. Um, so, but I'm just gonna stick to Bitcoin here. I don't like this. I don't like us crossing 100,000, getting to 125 and rolling over. I do think there's some structure damage here. I do think so. You got this 50-week moving average, which we just blew through. So a 50-week is akin to the 200-day, and William O'Neill would say that in of itself is an exit signal. William O'Neill, founder of IBD, he's one of the better investors of all time. Um, he doesn't, if anything's below, he just won't do it. Like he just won't even consider it. I mean, and you've had some decent distribution up here. Let's get rid of those high volume candles. Um, so, I mean, I'm not a big fan. I've been all cash now for a minute, so I don't like anything that's not in an uptrend. Seriously, Ted, if it's not in an uptrend, I am out. Like I'm completely out, and I don't mind waiting. Like I really don't. I don't mind. See, I think there's a bit of a difference, and I think you and I are on different sides of the spectrum a little bit. I don't mind waiting for the opportunity in cash. You don't mind waiting for the opportunity in the asset. Does that make sense? So I don't mind waiting on the way down for something good to happen, then jumping back, then kind of jumping back in for my trade. But I do something for like a specific trade. Yeah, I don't like being in an asset because in reality, and this is the other flip side of the coin on the DCA community is no one knows what this shit's gonna do. I don't even know what it's gonna do. I'm not never proclaimed I did. I just read the charts and kind of make the best decision in the moment. But I'd much rather sit in cash. Personally, I'd much rather sit in cash when the market is not in an uptrend, when the market is not uptrending, and it is not uptrending right now. So looking at this chart, I've got my trend lines, I've got moving averages, right? We have some signals we can look at. You can draw some other indicators. You can look at waning upside potential here, which it looks like we have, an arching over, down, to the right, flattening out, maybe eventually rolling over. The cycles have gotten a little bit different with Bitcoin in the past several years, so we don't get the extreme drops that we once did. Yeah, I definitely think choosing your asset, like Ted, I want you to win, dude. I really do. Choosing your asset is very important. And if you want to do weekly, fine. Like zero issues with that. You know what I mean? There's different ways to skin this cat. I think you sell at opportune times. Like I talked about selling at opportune times earlier, Ted. If you didn't, I don't know when you jumped on, but you can review those. It's your leisure. This is the public stream, so you can review those. Go back there, look at those, and apply that to the weekly. You can do that. You can apply it to the weekly just as you can the daily, and look at it once or twice a week. You don't have to go crazy. Because doing active trading is taxing. I'm not saying it's not. It is. And, I feel that in the moments when I'm actively trading. I feel like I get run over by a fucking train sometimes. But yeah, so I think we've structurally been damaged. Yes, I do. Where do we go? I don't know. These last two ones have stalled out relatively quickly. This one could stall out relatively quickly. So, if it's not a situation that meets your criteria and you want to hold it, that's fine. I would just say know when a structure's been broken, because you view the market in terms of structures. That's kind of how I do it now. I view it in terms of little structures, bigger structures, overlapping structures, Yeah, so we'll go back to the daily for a second because I've got that Wyckoff the Wyckoff channel up here. So Wyckoff, like this top has been brewing since July 13th and it broke down on November 3rd. That's how many months? Like 5 months of topping signature, you know? That's a long period of time, you know, to top out. And then the market comes down, it'll probably consolidate a little bit. So, you know, let's say you exit over here somewhere, maybe you get back in at break even. I don't think there's anything wrong with getting in at break even. I think there's nothing wrong with that, as a matter of fact. You know, if you exit up here, it drops down and it pops back up, you just get back in at about the same price. No harm, no foul. But if you exit and it dumps, you know, which I have to go back a little bit for that now, fortunately. But if you exit and it dumps or dumps or dumps or dumps or dumps or dumps or dumps, then you're in a much better spot. You're in a better advantageous spot. You know, there was a survey that a lot of people tout that says if you're not in the best 10 days of the market, you lose like, I don't know, 20, 30, 40, 50% of the value of the account. I forget what it is. If you guys are familiar with that. But there was another study I saw where it said if you were out for the worst 10 days of the market, your account would be up 60%. Because I asked that question one day. I'm like, okay, I get it. Because I researched it. This is before AI. I researched it with Google, and I found some science. Let me see if I can find it. See, this is where AI can be helpful. What is the survey that looked at if an investor was out the top 10 worst days of the market? Yeah, I'm pretty sure. So hopefully they should be able to find it. Aw, you suck. It's there. Best and worst days in the market. I wonder if I saved it. I may have saved it. Let me see. I'm not even sure I have a trading thing in here, do I? Trades, trade trigger screenshots. Survey. Mobile sync, Mongo. I don't know. I don't know if I saved it. I think I saved it at one point, but anyway, that's what I remember. I guess do your own due diligence on that one, but yeah, I don't like holding. I don't like holding in downtrends. I don't do it. I'm allergic to it. Achoo. I'm definitely allergic to it. No, it's not. It's a small. It's like a. I think it's a college paper by some professor somewhere, one time. I thought it was really interesting though. Maybe. Well, I guess we can Google a little bit. But you know, at the end of the day, Ted, you know, I could shout a lot of numbers and statistics. At the end of the day, like I've been saying for years, we all just need to find out what we want to do and just get really good at that. If you wanna, you know, time stuff on a weekly chart, I think that's fine. I don't think there's anything wrong with that. Like nobody needs to hold through 2008. I don't think that needs to happen. The next correction that comes, we don't need to hold through that either. Okay? But if you want to be in the rest of the time, that's perfectly fine. No issues with that. What if you are out of this stock market on the worst 10 days? Hey, Aram, what up, Aram? Hartford Funds. Miss the worst days, miss the best days. Yeah, I'm not sure I want to go into everything here, but all days missing 25 best days. Oh, 25 best days? Oh, jeez. Come on now. Does market timing work? Duh. Yeah, it fucking works. Stupid. So